Hello, welcome to topic about cash flow statement to presentation of cash flow. Cash flow report which classifies operating, investing, and financing activities. When we prepare cash flow statements, we're focusing only on the cash in and out. So as per accounting standards, we need to present our report on accrual basis except for cash flow statement. So the first section of cash flow that will be under the operating activities. When we are presenting the operating activities section, we are focusing on the cash inflow and outflow, which is coming from our operating activities. Example of this will be cash receipts from sales of goods and rendering of services, from royalties, fees, commissions, and other revenue, cash payments to suppliers for goods and services, payments to and on behalf of employees, cash receipts and cash payments of insurance entity for premiums and claims, annuities and other policies, cash payments or refunds of income taxes, of course, unless it is directly identified for financing and investing activities, and then cash receipt and payments from contracts held for dealing or trading purposes. As you will notice, all the items here are pertaining to our operation. When it comes to investing activities, there should be a separate disclosure of cash flows arising from investing activities because it's important for us to determine to what extent we spent or we generated flows or income from our resources. Such as, for example, if we place our money and we purchase equipment, the equipment is being used to generate income. So there are lots of examples here. We'll just pick few things so that we'll have some ideas of what will be the investing activities. So cash receipt from sale of property, plant and equipment, intangibles, and long-term assets. Cash receipts from sale of equity or debt instrument if you're holding those instruments, and other entities and interest in joint ventures. Cash advances and loans made to other parties, of course, other than advances and loans made by financial institution, which is under the operating activities. Cash payment for future contracts, forward contracts, options contracts, swap contracts, except when contracts are held for dealing or trading, or the payments are classified as financing activities. So these are examples of investing activities uh, regarding cash flows. Financing activities will be focusing on the cash in and out of uh, our capital and loans. So in this case, if we have sold our shares, the cash proceeds from that share will be classified under financing activities. If we had requested and we've been approved for loans, then that will be, or the cash proceeds from those loans will be under financing activities. And if we paid our amounts borrowed, then that will be under financing activities. We have two methods of presenting cash flows from operating activities. The first one is what we call direct method, where we present the gross receipts and gross payments, while indirect method is the one which we start from profit or loss, and then we will adjust based on the non-cash nature, any deferrals or accruals, or future operating cash receipts or payments. So the accounting standards encourage that we use a direct method of reporting. The reason is this will provide more information comparing with the one we are using under indirect method. Reporting cash flows from investing and financing activities, we have to report separately major classes of gross cash receipts, and gross cash payments arising from investing and financing activities on net basis. On certain items such as foreign currency cash flows, we will have to use the functional currency. Interest and dividends, usually under operating activities for financial institutions. For other institutions, this can be reported under operating activities. Alternatively, interest paid under financing activities, dividends received under investing activities. Dividends paid may be reported under financing activities, alternatively under operating activities. For taxes, if the taxes or the tax was calculated from operating profit, then the tax payment will be under operating activities. For individual transaction, we have to determine which activity we had generated or we have calculated that tax. So if it is coming from investing activities, then the tax paid should be under investing activity. That's it. Thank you for watching the video. I hope you learned something.